It's a great pleasure to be here this morning, and I want to tell you about a project that we are doing jointly with a credit union, which we call a project about a financial health check. This is a joint work with my colleague Sendil Mulanathan, who's at Harvard, and Piyush Tantia and Carter Powers at Ideas 42, who are in the audience. So what is this project about? Actually, what we are trying to do here is to implement an action-based research project where we're working with financial coaches and a financial service company to help people go through what we call a financial health check, like a health check in general, to allow them with a coach to check into the quality of their current financial decisions, so to get, in a way, a status review with the coach about, where do they stand and how do their finances look like. And then, like in a doctor's appointment, the coach goes with them over certain financial decisions that they are rightly or wrongly making and try to reset a lot of the mistakes that the person might currently be making. The two behavioral insights that we will be building on in this situation is that we know from a lot of lab research that has been done before, and also, of course, a lot of the survey work that Anna Maria and Peter have done in the past, right, that people report about their own financial situation, that on the one hand, self-control in many financial situations is very difficult. And, I put up, just to be a little funny, this cartoon here, but, people, of course, struggle with not overspending, and when asked, very often would like a way, or commitment mechanism, a way not to spend as much as they might be spending. The second insight that we know from a lot of prior work is that also people have limited attention, right? All our lives are very complicated and busy, and we don't like to read either the fine prints in financial contracts, right? Or spend a lot of time reminding even ourselves that we want to make certain contributions to our savings account, or to make sure that we are optimizing between using one credit card versus the other, etc. Right? So given those behavioral insights we have about consumers, what the health check is trying to do is to allow people to set a lot of defaults in the coaching situation that then going forward would help them to manage their own finances better. And so how does that look like? You should literally think of it. We're working with a real financial institution, a credit union, that has hired financial coaches who set up a 1-hour session, or up to 1-hour session, with a client, right? And go with them through their current financial budgeting, their current financial budget, right? These sessions are voluntary and they are free. And I'll show you in a second, we can actually look at take-up and who selects to go in there. And what the people will do is two main things in the coaching session. As I said, they will go over the budget with the coach and see what are the things that they're spending on, what are the things they might not want to spend on but need help in a way setting up their own commitment mechanisms, and what are the amount of savings, or at least minimum savings, that they should try to be achieving for their financial stability. So to achieve that, the type of treatments that the coach can set up in the session is that the coach has the ability to, together with the customer, of course, set up automatic transfers into the person's savings account, so that they don't actually have to think about savings every month, right? But it's automatically deducted at the beginning of the month. And of course, the coach and the person, after going through the budgeting, agree on the amount to be set, right? So we also not want people to have, unrealistic financial goals for their savings, so that in fact they will immediately fall short. So the second thing we can do, or that the coach can do in this situation, is automatic bill payments, in particular into credit cards of high interest rate, so that again, right, people do not incur a lot of what we might call leakage or penalty fees that in the end are detrimental to their financial health, right? The person is also setting a financial savings goal for themselves in this coaching situation. And at the minimum, we allow, or we work with the saver or with the person to set up reminders either through email or SMS to remind them to save. So as you will see in a second, but one thing that we wanted to be sure is that if people feel uncomfortable to set up automated and direct transfers or deposits, that at least we have a fallback option to help them achieve some of those goals, maybe in a somewhat less hand-holding or kind of less automated way. So these are the type of interventions that the coach and the client can implement. Now, for the study overall, what are our goals then once we set up this type of treatment? We actually have 3 goals at different levels, so to speak. So the first one, of course, and the biggest one, is to see in the long run is there a lasting impact, and how does the impact look of this type of financial health check? So the question is, do we indeed see that those automated savings, transfers into savings or transfers into high-interest credit cards allow people to, in the long run, have a better financial situation, right? Do they save more? Do they waste less money in penalty fees and late fees? And therefore, do we see them actually improving their financial welfare? The alternative, of course, could be that people either, when they have a little bit more slack, right, or a little bit more room that we just created, maybe they're just using it to spend on other things, and half a year later, they look exactly like they might have looked at the beginning, right? So therefore, it's really important for us to understand whether improving the quality of the financial decisions, first of all, does it stick? And how do people use the slack that is created, right? Do they use it by indeed saving more or by then spending on other things? So that's the first set of questions, and I have to disappoint you. This is something we can't tell you about yet because it will take a little more time to actually learn that, right? Because we just are in the process of setting this up. The second big question that we have is who self-selects into this type of financial health check. As I told you, right, this is voluntary and it's free, but of course we can't arm wrestle people into coming into those meetings, right? So what we can see is, are the right people, quote unquote, self-selecting into the treatment? What we mean with this, do we see, for example, financially fragile individuals or people who are actually very often bouncing checks or having late fees, who are not saving a lot? Are these the people who come for the health check? Or maybe the alternative could be, right, that the people are already doing everything right, who are phenomenally conscientious, those people also come for the health check, but maybe there is not so much to help them with because they're already doing a lot right. And so it's important for us to understand whether, in a way you can say there's self-awareness of people about their own financial needs. And I will show you a little bit about this, and in fact we think it's very encouraging news, at least in the context of this credit union. And then the last question that we also are trying to address, less from a, let's say, intervention perspective, but by actually working with this credit union, is to understand whether in the long run this type of service can be sustainably provided by a credit union or by other financial service companies. What do I mean with this, right? These, as you can imagine, right, these in-person sessions are not cheap. The coach has to be paid, right? And the time of the person has to be accounted for. And if we want to do this sustainably, we need to understand, is there a gain from trade, or is there an overall improvement that would allow a bank or a credit union to actually sustain this? And what we want to therefore see in the context of this study is whether the gains in understanding people's finances better from the lender or from the financial service provider's perspective are enough to cover the cost of providing the health check. So to be a little bit more specific, what we mean with this is that, for example, if in these health check sessions we can actually learn a lot of the unobservable credit quality of the people who come into the session, right? That would allow the financial service provider to provide if they actually know that the customers that went through the health check, while they might still have a low credit score, they might de facto be of higher credit quality, right? Then there would be an advantage for the financial service provider in actually dealing with these customers, and it would help them to manage risk better, and therefore could indeed be net positive also to the provider of the services, right? And in that case, it might be sustainably provided by the credit union. But that's, of course, something that we will only learn in the long run. All right, so these are our 3 goals. So let me tell you what we have learned so far. And as I said, right, this is an action-based project. So the real outcome of this implementation will take a little bit more time to evolve. But so far, what we have learned, we think are already a few very interesting things. So first of all, so we have an outreach campaign to reach the customers of the credit union, right? So you should think of those as low or lower income individuals that are part of the credit union and that are customers of the credit union. They either have a credit product or a checking account or even already a savings account with this financial institution. And what we have seen in the outreach campaign is that indeed people seem interested, but we also find that channel factors play a huge role in getting people to come to the health check session. So what we've done is, as a first level, we did a mailing campaign where we mailed out about 13,000 letters, and we have a response rate of about 1.5%. That's pretty standard for mailing campaigns, so there's nothing to quibble with this. Now, what we then found is we also did outbound calls, and there we find a response rate of around 3.5%. Again, this is very similar to what we have found, what other people have found in these type of outreach campaigns. Now, what's interesting is that there's a 10% response rate among those people that are reached. So conditional on reaching somebody or conditional on finding someone who's interested, right? Actually, we get a 10% response in getting people into the health check. To set up a health check session with them. What is also interesting, right, is that we have a 25% no-show rate when people are, after people have actually scheduled a meeting. Again, if you compare this, the last number is a little bit less than you might see in, let's say, what we have seen in general in financial services with banks, but that might be either how interesting our health check is, but it could also be affected by the fact that this is a credit union that has actually pretty good ties with their customers. But let me show you the most interesting part of what we have found so far is that we do seem to find pretty strong positive self-selection by the customers who select into the financial health check. So when we compare the average population of this credit union, right? So the people that we mailed to, with the people who showed an interest or who responded to our outreach, you see the blue line. Well, you see up there. The blue line up there are the non-responders, right? So in a way, you can think of the people we mailed to but didn't respond. And the red line are the responders. And this is the way you should read this is on the bottom is a progression of the credit scores, right? So we are lining people up by very low credit scores, right? 450 on the left, and all the way up to 810, right, and more on the right. And what's interesting, right? What you see is that the responders, not only I have a positive self-selection, but the shape of the curve is quite interesting because it shows you at the very left tail, so people who have in really bad financial shape and their credit score is very low, there is no difference in responders and non-responders, right? I mean, but where we really see, and on the very right-hand side, people who are in really good financial situation, right? They all seem to very much not respond, probably because they know that they don't need that type of health check. But we find that it's exactly in the middle bucket, right? The people that are if you want, the gray area, who could benefit from, we think could benefit from the financial health check, they seem to indeed self-select into this particular service. So, that to us is actually quite interesting. And now what we will see going forward over the next half year is what are the outcomes from actually doing those, from having the people that go into the financial health check, and we will of course compare them to the control group that, randomly selected and so on, that will not receive the financial health check, right? So as an outlook, hopefully, for the future is that we will be able to tell you about what is the impact of the financial health check on the people who get it, but also we will be able to see whether those type of automated savings that we set up for people, whether indeed stuck or people use them in a different way. Thank you.